Listings are up, price cuts are accelerating, and in some of the hottest markets here in Florida, we are seeing cracks appear in our housing market. In this video today, I am going to count down the 5 top cities here in Florida that are at most risk for a major correction here in 2025. And as you know, I'm from Naples and I talk a lot about Naples, so I bet you're wondering, did Naples make this list? Well, watch to the end to find out. Before we begin, let me tell you what the red flags are that I'm looking for across these cities here in Florida. And these are the signs that show that the market is on shaky ground. First, we have inventory that's rising faster than demand. Homes are sitting on the market longer. There's a high percentage of homes that have had price cuts. Sellers are still stuck on the premise that they can get whatever they want, and buyers are balking. And we have places where prices are so high, locals just can't afford to buy anymore. Let's start with number 5 on the list, and that's Cape Coral. Cape Coral was one of the biggest boom towns in Florida during the pandemic, and now it's one of the first to show signs of a major correction. Inventory is up 100% since last year. 1 in 3 homes have had a price reduction, and homes are sitting on the market longer than 90 days. And another factor, Cape Coral has a high number of rental and investor-owned properties. And when the demand for rentals cools and prices drop, we see those houses dumped on the market quickly. And when that happens, we definitely see our inventory rise and it increases our instability within our market. And this isn't the first time we've seen this pattern. And back in 2008, Cape Coral led the way with the steepest price cuts and the most foreclosures throughout the whole country. Last time, they fell hard and they fell fast, and I feel like it's happening all over again. So what do you think? Do you think Cape Coral is heading for that steep correction or just an easy reset? Leave a comment and let me know. 4th on our list is Palm Bay. Palm Bay is located in Brevard County, and while it didn't make the headlines like Cape Coral did in 2008, they did see their fair share of price drops and also foreclosures and a sharp pullback in new construction. And fast forward to today, we're seeing those same troubles. Inventory is up 45% from last year. 1 in 3 homes have had a price reduction. And while the median price hasn't dropped dramatically yet, sales have slowed down to a crawl. And that's a classic early warning sign. And here's the problem. Palm Bay doesn't have the economic anchors like its neighbors, which is Melbourne and the Space Coast have. It has less high-paying tech and aerospace jobs. It's more commuter-driven. It's more sensitive to gas prices, to interest rates, and inflation. And a lot of growth over the last few years came from out-of-state buyers looking for affordable new homes, but they purchased them as investment properties or second homes. As affordability tightens and there's less migration here to Florida, and investors have become a little bit weary of the area, we're seeing sellers feeling the pinch when it comes to pricing their homes. And in the early 2000s, Palm Beach kind of saw the same thing. We had an influx of investors, they bought up quickly, and then when prices started to drop, they exited even faster. This area may not be as overexposed as it was in 2008, but we are seeing those early signs of what's to come. Is this going to be another 2008 for Palm Bay? I don't know, but I guess we're just going to have to wait and see. All right, number 3 on our list is Tampa Bay. So in this area, the inventory is climbing steady, the median home price is coming down, and 1 in 3 homes have had a price cut recently. And the rental market, fueled by investor demands, well, it's seeing a cooling off period as well. Rents have flattened across Tampa, and we're seeing that landlords who aren't making the money they're used to are starting to pull back. But the bigger issue is affordability. Tampa is now considered overvalued by more than 30%. And that's according to several housing risk models. Because home prices are overvalued in Tampa, people like first-time home buyers and even people that want to move to a new area can't afford to do so. They've been priced out. During the last crash, Tampa didn't fall as fast as Cape Coral did, but it fell hard and it took much longer to recover. Foreclosures surged, prices dropped, and it took years to recover. Tampa may have more economic diversity this time around with healthcare, tech, and education, but the underlying pressures are still familiar. Prices moved too far, too fast, and now we're seeing the pressure of correction. So let me know in the comments, is Tampa stronger than the data suggests, or are we headed for the same situation we had in 2008? Let me know. And that brings us to number 2 on our list, which is Fort Myers. And just like Cape Coral, Fort Myers felt the surge of the pandemic. We had a ton of new growth. We had a lot of new investors, and we had massive new construction projects going on. And now we're seeing that momentum stall and in some places actually reverse. Fort Myers has seen their inventory double year over year, and 40% of their homes have had price reductions. So right now you've got buyers that are hesitant and you've got builders that are freaking out. So they are reducing their prices, they're adding incentives, they're doing whatever they can to get buyers into their new homes. And that is just crushing homeowners that bought at the peak. And back in 2008, Fort Myers was one of the top 10 housing markets hit the hardest. Entire neighborhoods of new construction sat vacant. Home prices just got pummeled, and just a wave of foreclosures came through the area. It was one of Florida's most painful real estate resets. And while the setup isn't identical to 2008, the sign of oversupply and retreating buyers is giving us a little bit of deja vu. Is Fort Myers in another boom or bust scenario, or can they stabilize before it gets too bad? Leave a comment, let me know. And number 1 on our list is Sarasota. Sarasota is known for its luxurious coastal lifestyle, its arts and cultural scene, and it has a strong appeal for retirees. And underneath this perfect postcard image, we're starting to see some cracks. Homes in Sarasota are staying on the market over 100 days, and over half of the active listings have had a price reduction. Sarasota is now one of the most overvalued metro areas in Florida. And what's the big issue here? Well, it's pullback from the high-end buyers. So Sarasota relies on cash buyers. They rely on people that are buying second homes and retirees that are looking to retire from a more expensive state. And those buyers are really sensitive to the market, the stock market volatility, to inflation, and just economic uncertainty. And when confidence dips, those discretionary buyers, well, they hit the pause when it comes to buying new property here. And that's exactly what we're seeing now. In the 2008 crash, Sarasota took a little bit longer to fall than some of the more speculative areas. But once it did, it dropped fast, especially in the luxury market and the second home market. And that recovery took a long time. A lot of homes sat months and even years with no interest. With inventory building and prices being cut and the luxury home buyers sitting in the market, are we in for another 2008, or are we going to have more of a soft landing? It's going to be interesting to watch. Now, if you've been watching and wondering what has happened here in Naples, Florida, well, we didn't make the list, but we could have. So what we're seeing in Naples right now is an increase in inventory. It's not even along every zip code, but we are seeing spikes of inventory increases. We're also seeing price decreases. About 25% of homes here are seeing a price decrease. And in some areas, not all of Naples, but some areas, homes are overvalued by 30%. So what's the difference when it comes to Naples? Well, a lot of our homes here are purchased in cash. So when it comes to interest rates, that isn't a factor here. And a lot of our second homes are purchased by very affluent people. And that helps to keep our market stable. Naples is definitely seeing a correction, but we're seeing it mainly in our entry-level to mid-range homes. And what's keeping us going right now is our high-end luxury buyers. Well, if something should change and those buyers dry up, then that's going to affect us and bring us to the point we were in 2008, where the high-end real estate market collapsed. So, do you think Naples is headed the same way as everyone else on our list? Let me know in the comments below. And if you want more information about what's going on in Naples, I do have a video out right now about the hardest hit areas here in Naples, Florida when it comes to the real estate market, and you can check out that video. I'll leave the link in the description below. Florida's market isn't crashing everywhere, but in these 5 cities, the signs are clear. We've got inventory rising, we've got prices being reduced, and we have buyer demand slipping. And whether you're a buyer, a seller, or an investor, this is the time where you really need to pay attention to the market, neighborhood by neighborhood, to see what's going on. Hey, I want to thank you for watching. I hope you enjoyed this video, and if you did, make sure that you hit that like button and subscribe to my channel to see more videos like this one. And while you're at it, leave a comment and let me know, which of these 5 areas do you think is most in trouble, or is there somewhere else that you think is headed their direction? Leave a comment, let me know. I'd love to hear your thoughts. Until next time, bye.